Voters will have the option to cap interest rates charged by payday and car title lenders in next month's election. Initiative 164 would cap those rates at an annual interest rate of 36%. Right now, rates are anywhere between 400 and 650%. Capitol reporter Emilie Ritter has details.
The Cap the Rate initiative drive started back in February with a coalition of nonprofit, low-income, and senior advocacy groups. Now 20 such organizations like AARP, MEA MFT, Montana Catholic Conference, and the Montana Food Bank Network are making the final push to get I-164 passed on November 2nd. Tom Jacobson is the executive director of Rural Dynamics. It provides financial education and counseling to low-income families.
And I don't know that any industry that is allowed to prey upon individuals who are having financial duress or in an emergency situation to charge them exorbitant interest rates just for that fact. I don't think that's ethical.
Payday and car title lenders offer short-term loans, usually for 2 to 4 week periods, and can charge a fee up to a quarter of the value of the loan. Those fees equate to annual interest rates of up to 600%. State law says lenders can only give out $300 loans, so the maximum fee would be $75.
If they don't have $300 this week, they don't have $300 in 2 weeks. And because typically there's not an option to make payments, they have to roll those loans and become repeat borrowers. We are seeing clients that come into us with 4, 5, 6, sometimes 12 different payday lenders.
It's not legal for borrowers to have more than one payday loan out at a time, but Jacobson says it happens. Lending companies say if I-164 passes, it will put them out of business because they can't make a profit with interest rates capped at 36%. Eric Thomas is the area manager for Check and Go. He says the initiative would force lenders to charge just a little over $2 per $300 loan. Thomas says his company isn't predatory.
It's very feasible to come into a payday lender and get a quick $200 loan for anywhere of fees between $15 and $40 for that $200 loan. We're a fee-based loan. We're not a simple interest loan, so we do not accrue interest daily. So with this initiative of 36% as an annual percentage rate, they're not taking into consideration that this is a 2-week loan.
Still, according to the National Division of Banking, most borrowers who use payday and car title services take out 13 or more such loans per year. The Cap the Rate campaign says based on that information, the average borrower will end up paying $800 for a $300 loan. Thomas says that's not accurate.
You do not get charged the interest if you do not pay off within the 2 weeks. Essentially, it's just a flat fee.
Check and Go wouldn't give me a copy of a standard loan contract, and detailed information on rates is not available at its website. Thomas knows there are borrowers out there who take out more than one loan, so he's proposing a tougher regulatory process.
Instead of the proponents of this Initiative 164 to completely get rid of this in the state of Montana, is adopt some practices that other states have done nationally, which is database states, where we can actually track Social Security numbers so that we know that one person has an active loan at this location, so they would be ineligible for a loan from us.
The U.S. Congress has capped interest rates on loans to military families at 36% annually. Other states have similar laws. For Montana Evening Edition, I'm Emilie Ritter at the Capitol.